All right, so welcome everyone to the India market review for 22nd January 2016, Friday, and it's been a interesting day across the world as far as the markets are concerned. We had a nice bounce on the Nifty today, as we all know, and the market was up quite handsomely. As we all know, some of us are quite happy about that, I'm quite sure, and are hoping that the fall is over. So one of the most impressive days when the market closes 2% up, uh, quite consistently up move through the whole day, no giving up of the gains of the day at all at any point. Unlike the last 2-3 sessions where when the market did open by like lunchtime here, it just lost its complete gains and then even went into the negative territory. And this time, well, it's held up. And as we all know, basically this has come apparently, at least on the back of news of the European Central Bank wanting to do a stimulus package, right? And they are going to be injecting some amount of money into the economy there. And so everybody is very happy with that, right? And it's in a sense, what shall we say, quantitative easing yet again, but this time from the European side and not so much from the uh, uh, American side, right? And everybody's hoping, waiting that. By the way, can you see the Reuters screen at your end that I have put up? Just confirm. Yeah. Okay. It's taking a while to come, so in case there's any delay, just let me know in the audio versus the voice. All right, so Draghi is the governor of the European Central Bank, and then of course uh, what he said was that the central bank would ease policy further at its next meeting in March to combat fading growth and disinflation, right? And a message that he reiterated at the World Economic Forum at Davos. And a lot of the stocks just went up. It's basically, again, money being printed and being thrown into the system. So the questions arise that, is this the solution? Of course not. Any of us would know that that fundamentally it does not really change anything, and the economic mess or the slowdown and the threat of uh, uh, people talking about global recession is definitely very much there. You can't get out of that by printing money. And if you saw, I mean, if you see recent articles in various papers about what central bankers can do and even the discussions at Davos, then one thing that comes across is that the central bankers are saying that, look, there's only so much that the central bank can do. It does definitely require that countries and or rather the governments do what they can and they have to stimulate their respective economies, right? So basically that's how it is, and this could be a temporary move up across the world. We've seen markets definitely rising, and you know, even as we speak, US, Europe, everywhere. US is up 1.5% on most of the S&P indices, though this is still early days and early morning in a sense in the US. We'll have to see how the rest of the day pans out, right? And whether they can hold the gains of the day. The Dow Jones is up 2.5% on the transportation index side. Uh, and so, and Europe, let's just look at Europe quickly. Okay. Are you seeing the, if there is, because I get a audience view here, but it's not reflecting the change. You should be seeing a Yahoo Finance screen as I'm speaking, and if there's a lag, please let me know. Seems to be one today. Okay, and Europe still quite firmly up, CAC up almost 4%, 3.5 plus, and DAX, the most important one, almost 2.5% up plus, and just like India, looking at closing at its day's high, looks like, right? So that's how the whole world has been. And jumping into the Indian side, we have here the Nifty chart, okay, and just get going with it quickly. And what you can see on the Nifty chart is a pretty nice, bounce on not a, I wouldn't say pretty nice bounce. It's just a move up which is there. On, however, lower volumes. That's one thing definitely to note. Plus, one thing that could be giving us a hint of anything perhaps is now you have higher lows. However, having said that, please note here just about a week back that the higher lows quite deceptive, and then the market had this big red candle. So very well we could just turn back down. Besides the fact that we have come to a resistance level now of around 7,430, and we'll just have to wait and see whether that resistance levels gets broken. That is a level which is also from 2014, middle of that, of course, sort of, and uh, if that will now have to break out, and then there'll plenty of resistances on top. So at this point, definitely too premature to say that there's a bottom. Absolutely not. This could just be a bounce in uh, continuing downtrend. So we've now established a lower bottom, and then we'll have to see whether we'll establish a lower high, or we will keep coursing up. Given all the stuff that's happened, we should probably get a lower high, which would be a nice place to get out of any longs and or get into shorts, right? So that's basically uh, what the strategy or the plan or the approach to the market should be. Looking at the weekly charts, there is definitely something of interest, which is we now have a hammer sort of, or a dragonfly doji, right, or doji hammer in a weekly chart, which, well, till we get confirmation, which will take another week. And remember, next week Tuesday is a holiday, so we have a shorter truncated week, and until and unless we get confirmation on that, there's really we just have to sort of wait it out. There's nothing else to do. Okay, so nice relief rally at this point, possibly quite a bit of some amount of short covering. Next week is also expiry, right? So then definitely expect some amount of volatility on that account. And overall, very much looks the same. Just to quickly look at which sectors did well, which sectors did not do so well. Here's our relative performance chart, and maybe I'll just squeeze it into a shorter time frame and give us a maybe better, slightly better picture. Okay. Okay. This is interesting. I just noticed something which I'm going to point out to you. Okay. Unfortunately, I don't have such a high level of competency in AMI brokers, so I can't really change the thickness or the color of the lines in this particular type of chart. Okay, there is a what programmatically method of doing that, but I'm not yet there as far as AMI broker is concerned. So I just want you to notice the lowest line here, and that is the real estate index, right? Or is it, sorry, it is the, yeah, it's the metal index, not the real estate index. It's the metal index which is there. And what I'm now, so what I'm going to do is, so this is a relative chart from about June of last year to now, and I'm going to make this a shorter time frame. So I'm going to squeeze in, and while it will not appear as a nice transition on your side because of the video lag, just try and visually remember this bottom line and that dull gray color, and see how it moves, right? So here we go. Okay, so I'm going to hold it here. This is now from October of last year, so we've taken out 3 months. And what you can see is this gray line has now moved up. It's not the lowest line, it has slightly moved up. So which means that this metal index is not really the worst performer if you look at a different time period. The worst performer in this case is now, I'll tell you, 31 is capital goods, right? This uh, and this bright yellow, that is CNX infra, right? And if we move this even further, okay, I'm not sure. Yeah, all right. So now you'll see that here's this gray color that I'm talking about. It is at minus 11 now, and sorry, minus 11.8, and that is the metal index. So you can see so basically what I'm trying to illustrate here is that at different relative performance measurements, the metal index is actually showing uh, different relative positions, and that's not the case only for that. It will be the case for everything, and the interpretation, okay, and uh, let's see if this makes sense, is that as we take a shorter and a shorter and a shorter time period, the metal index performance is getting better and better and better. It is beginning to outperform more and more of the other sector indices. Does this mean that the metal index is showing more strength while the others are actually showing more weakness? Perhaps, right? And therefore, should we maybe focus on the metal stocks? And that's where some amount of, or not some, but there's growing bullishness in those areas, right? So these are some of the interpretations that we can do. I think it'll be a little I don't know. Can you see the chart clearly? Because I mean, trying to do that sort of a relative interpretation for all the sectors is definitely going to be a challenge when the transition is a little, rough. So just trying to see if there's anything else which is transiting very differently. And okay, 1 second. All right. So one more sector that I observed while I was just shuffling around, it seems to be doing better, is reality. Okay, this is that sort of I don't know what color you call this, cyan or something, whatever. This one, can follow my cursor. That one also seems to be increasing in its strength as we get into shorter and shorter time frames. So the moot question is reality and metal the space one should be perhaps looking at, right? I don't know, could be. So just keep that in mind, and we'll come back to these findings in a little while. So in the meantime, let's look at, and then now of course let's look at our indices and our lists from that. Okay, oops, where did it go? Okay, so we look at Bank Nifty first, right? Oh, okay, 1 second. 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 1 sec All right. So here we have the Bank Nifty now, and what we can see on the Bank Nifty, well, no surprise if you've been doing TA for some time, is that we today came very close to 200-day moving app. Sorry, no, that is a weekly. All right. Oh, this is the daily chart now. Yeah. All right. So here's something really nice on the Bank Nifty. It's a nice bottom slash reversal plus more or less a confirmation, except that the volumes are not so happy. And if you look at it in the last, this is today's candle, and yesterday and day before yesterday, you had immense volatility in the Bank Nifty, both upper shadows and lower shadows. So definitely a big fight between the bulls and the bears. And 15,000 seems to have held as a support very clearly as of now. And you can see that 15,000 was also a support in 2014 mid, okay, in this area, right? Plus, if we go back, yeah, so that was the only support which was there. Definitely has held that support as of now. And if we look at the indicators, okay, they are, I wouldn't say showing strength, but one of the things you can clearly see is that the MACD is narrowing down, signal line, and the divergence is narrowing down. That doesn't mean it's going to go up, but that's definitely a good thing as far as the chances of a further uptrend are there on the banks, especially on the PSU banks. They have been beaten down very, very badly, as we know, and there might be value buying there. So this is the PSU bank index, and curiously, if you look at it, the PSU bank index is actually not showing the sort of strength that the uh, Bank Nifty is, right? So, okay, hold on. I'm going to make this a little easier. Okay, so what we have on the screen right now is both the PSU bank on the left side, and on the right side we have the uh, Bank Nifty. Okay, and I'm just going to zoom in. And on the left you have PSU bank, and on the right we have Bank Nifty. Okay, and what I'm essentially saying is that both have definitely recovered, both have definitely done well. Okay, except that I don't know, it's just maybe a visual thing. Let's measure 2,200 to 2,000. It's 100.5%. Okay, right. All right. So I was just wondering whether both of them had recovered similarly. It looks like they have. Actually, visual, I think it was just a visual thing. And on second thoughts, this PSU bank space here, the one on the left side, the Marubozu type, a little bit stronger than the Bank Nifty itself. So wondering whether these news articles that PSU banks have actually are trading well below some of their book values is attracting some value buying today. Of course, the volumes are another story totally, not really picking up, right? So I was just wondering whether the private sector space and the public sector space have behaved differently. So not much has happened, so we'll move on. Next, we will look at, say, energy, and energy has, well, okay, in line with the rest of the markets, well, done well, but clearly it's just sort of, it's a harami pattern which is there. It's inside the red candle, and you've got plenty of resistances right on top that you have to consider before thinking of going long. It'll probably only be safe to get into energy once it crosses 8,350, 8,400 on the CNX energy index. Okay, having said that, it's just a reminder that the energy basket, generally consists of both oil marketing and the extraction companies and the refineries and all. So what's good for one doesn't is not necessarily good for the other. It'd really be nice if they had another index for the OMCs and a separate one for the ones like ONGC, oil and cane. Okay, so sometimes not really very representative is the thing. Okay, looking at CNX IT. Oh well, this is definitely making a higher bottom. There is no doubt about that. So first one we are seeing today as a higher bottom, and that is possibly on account of the rupee depreciating, etc. And I think some of the results have also been the market's been quite happy about. So that's clearly put a bottom in place. Plus, it's given some 2 days of long lower shadows, plus a very handsome and a capable reversal that we have seen. If you look at this in the weekly chart, still the overall trend would be down. Okay, so at best we can say that the down move has diminished for now, but you can definitely not say that we have a sustained up move in any sense, right? So we're just going to have to wait and watch on that. So this is but the higher bottom on the daily chart plus the chance that it's perhaps going to go higher, we'll have to wait and watch. But tentatively, this is a place where long positions or a sector where long uh, positions could be considered, at least so far. Looking at FMCG, okay. Oh, this is not so good for the FMCG, still showing weakness, though even though it made a lower bottom, everything else green candles, but this is not a green candle so far. So FMCG definitely still weak and needs to just be observed. CNX Infra, okay, so that's showing some modest strength, but this could also be a flag, okay, not a flag, sorry, a pennant, okay, and if it does break down, then we've got another about 200-point move, which is almost a 10% move that could still be taking the infrastructure space down. And with the slowing of the economy and all, quite possible that this is just going to break down quite further. Really, no fundamental reason that to believe that things are getting better on this sector. Pharma, okay, so another harami candle. So just should wait and watch that. That's the trend line to keep a tab on. And nowhere, okay, not really support even at 10,600 hasn't come there. Markets tend to like taking support at various levels, so this one has not. Could be a bounce, could easily go up another 150 points, reach that resistance zone, and then turn down again. And then reality. Okay, so reality in a very has made a new life flow. Okay, and I would say that this move up today is rather weak. Okay, could be the start of a move, up move, but it is definitely rather weak, and one would need to wait and watch and see whether the strength develops. On a weekly chart, there is really no help at all. So unlike Bank Nifty and even the Nifty, which was showing some strength, this is not. It may have put a bottom in terms of you've got a long lower shadow, but it will need a lot more evidence to think that the up moves are there. So on a bounce, this would still qualify, in my opinion, as a possible short. Okay, right. Okay, so nothing much. I'm just looking for strengths, divergences, or anything, and nope, it's not there. Okay, so that is reality. On the BSE side, we generally look at metals. Okay, and there you have it, right? So you can see the metal index, and it's got the of everything we've seen so far, the largest Marubozu type candle, right? So, but also word of caution, very close to its resistance zone now. Okay, and whether it will be able to break through that is definitely something that we have to wait and watch. Okay, so again, nothing on the indicators, so we'll just leave that there. Uh, Having said that, do remember, uh, in case any of you have read McGee, then this is quite possibly, okay, this downtrend line, once it is broken up, it could give us a very, very handsome return on the market. Plus, if this breakout or not breakout, this up move continues into the next week, right? So right now we have got a hammer on the um, uh, weekly chart. If, okay, let me just keep that there. Right. Okay. All right. So that level hopefully will not get broken. And if this level holds and next week we get higher levels, there is a study I want to mark here, which is that. Okay, all right. So what we had is a sort of attempt to break down here. Okay, it did go down, but the question is whether today's move back is the end of that down move or not. If it is, okay, so a support broken, this would be considered to be a false breakdown, and then if it can move back and then all the way back to 7,800, 7,600, and then 7,800, then we could be at the beginning of a new bull market, at least in the metal space. Okay, and that will definitely be interesting to watch. It's the only sector index which has this sort of a formation which we need to keep a track of, and this is how any new up move tends to happen in terms of, there'll be one sector which starts to do well, and then after that the positive sentiment and the fundamental news starts to get better for other sectors, and then we start to see a up move, right? So metals is a place to watch. It'll definitely not be a place to go short on. It's a place to consider going potentially long. Okay, so this and the IT space were the two things. Then there's auto, and oh, this has done extremely good today. So auto showing tremendous strength. It has really, really gone up even better than the way the metal index went up. So this is also showing a fantastic amount of strength. That's a very, very strong Marubozu candle. And then we have uh, capital goods, right? Capital goods, okay, some strength, but way too early. It could also be a downtrend flag, can't rule that out. So that's going to be like that. Okay, and if it breaks down, then we could see another, what, about 2,500 point fall, especially if it comes towards this resistance of around 12,750 and then is unable to move back up. It could very well break down and go further down. And if the economy is expected to slow down even more, then sure, this is exactly what can be expected, that the capital goods space is going to have pretty poor growth opportunities, right? And I think Uday Kotak, head of Kotak Bank, did mention that in the short term there is not much private investment that is happening in India, and we are back to sort of looking at the governments, central government mostly, of course, to do public expenditure project, infrastructure projects, that sort of thing, to help stimulate the economy. So at least on that account, it is similar to perhaps the 2008 scenario, right? Okay, so autos, IT, and metals, right? These are the three things that potentially had strength. Let me just make a quick note. Autos, IT, and metals. Watch carefully for some buying opportunities. Okay, all other indices either weak, downtrend intact, and are forming downtrend flags or pennants. Watch for potential breakdowns and further down moves. Right, so basically all the other sector indices are in that situation, just like what you see on the screen in capital goods. So like I said, apart from autos, ITs, and metals, very little bullishness in anything else, right? Okay, so that's the overall news here. And so this is just making notes. IMR 22 Jan 2016. All right. Okay, so with that, today's plan is to jump into the Nifty stocks, and well, just going to take them in this order, alphabetical, and we'll try and do some sector work if possible. Okay, so ACC first, right? And clearly has put a bottom in place, but way too early to say buy. The volumes are definitely not yet there, and you have a lot of upper and lower shadows in the last few days. So it's best to wait and watch. Two things, especially coming week. One is expiry, and the other one is Republic Day. So we have a shortened week, plus we have expiry. We may not really get too much move unless the global markets warrant that on their own, and there'll be a lot of this pressure of the option writers, etc. Coming back to ACC, well, you're looking at it from a 2012 level support. So this is a multi-year support, as good as anything else in terms of stopping out here. I have switched to weekly now, and what's very, very clear is this down move is now happening on increasingly lower volumes, right? That right? So quite possible that we don't have a much of a down move anymore, and we could be looking at a possible reversal here. So let's say the market stabilizes Monday, Wednesday, Tuesday is a holiday, then going long with a stop loss at around 1195 with a target of what say 1300, 1310 seems reasonable and low risk right now, right? Especially if it comes down to around 1210 and sort of forms a double bottom there or a tweezers bottom there and starts showing up volume, then that will really be a good opportunity. Ambuja Cement, right? So that broke down from that 190 support and has bounced back up, right? In terms of relative performance, is just switching between ACC and Ambuja Cement, then Ambuja Cement is clearly the preferred one. ACC made a much lower bottom. Ambuja Cement is like a triple bottom in a sense. It's not really, but still this zone there is in a sort of triple bottom. Okay. Um, of course, my bias might be that I'm looking for bottoms today. So one has to keep that in mind. And you can see that the volumes are really low, right? So really low volumes, potential triple bottom, could go long, and relatively speaking, this is definitely looking like a healthier uh, or a lower risk stock to get into compared to ACC, right? Ultratech, right? So Ultratech is the other cement stock, and if you look at that, then that's actually done much better. If you remember about, I think almost a year back, there was this period where Ultratech was just constantly outperforming the others, and this time definitely if I have to choose between the three cement stocks, then Ultratech it is. The results were good also, right? And the market has rewarded it, and consistent 3-day up moves, green candles, buy on dips on Ultratech. 2650 would be a good place to buy. The very good resistance exists at around 2800. You've got two long-term moving averages plus the downtrend line, which is there, which would probably take some effort to break out of that. That's for sure. Right. Okay. We've also got tentative golden crossover here in MACD, and if that continues, then strength is going to build. So Ultratech definitely should be on buy list. So okay, just going to put that on a different screen to make things faster. All right, so that's cement, and we are done with that. Then looking at Asian Paint, okay, there was after the results of Asian Paint came out, there were quite a few reports which basically reaffirmed the long-term bullish view on Asian Paints. Okay, now one of the things about Asian Paints, of course, is that their most important input raw material, which is crude oil, its price is just going down. But of course, in the last 24 hours, it spiked by 5%. But you know, sentiments versus fundamentals, I guess now, and this is also definitely showing quite a bit of strength and good pickup in volumes today. So Asian Paints also on potential buy list, but 880, 900 would definitely be strong resistance. Today it did take off from the 100-day moving average at 849, 850, exactly there. That's where the low sort of is, right? 849.2, and the 200-day moving average 849.6, right? As good as it gets. Watch for resistance at 880, 885, and then 900, and then perhaps a new life high. Having said that, remember that especially with expiry short week next week, many of these targets will perhaps not happen next week unless there's a very strong global recovery, and those targets will then get pushed into Feb. Okay, let's do, okay, I'm just trying to do it sector wise so that we have a better understanding. Okay, let me just put Bajaj Auto. Okay, so autos were also in the index showing strength. Bajaj Auto has gone up last 3 days, but volumes are yet to show. Clearly, there's a whole cluster of resistances there around 2,400. So watch out for that. And okay, really lackluster on the volumes. Tough to really take a committed view. I would say this is in actually no man's zone. If it corrects to around 2,275 and you can get in, then good. But the risk reward is neither here nor there. Okay, so we leave that. Let's go to other auto stocks. Bosch. All right, so this is interesting. It's actually gone down. Wonder if anything results or something. 18,000 support clearly broken, and that is now acting as a very good resistance and actually just sort of slipping on higher volumes, right? So that is definitely something to keep tabs on. Okay. All right. Okay. But looks like it's definitely going down further. 17,000 at least psychological level, I would say. And otherwise this next support is only at around 15,000, so would be very careful on that. Definitely stock to perhaps short, right? uh, because really there's no support anywhere. If you look in the past on the left side of the screen right there, just shot off from 15 to 18 with zero rest or correction and all. So if it has to go down, of course it could stop at the psychological numbers, but quite likely if the market weakens or there's some bad news on the sector or whatever, then 15,000 is very possible. Definitely no question of buying it. Okay, so that's on the auto ancillary stuff. Then let's look at Hero Motors. Okay, wow, what a recovery. Okay, this is a massive move, and Hero Motors put up a very strong hammer last week, as a matter of fact. And if you look at the weekly chart, then you can very clearly see a very strong Marubozu weekly candle rather, on Hero Motors, and it's definitely looking like a good buying opportunity. Again, please note that we are still in results season, and I don't know if anything has triggered that. I obviously don't know all the results in my head. So that not today's move is even more impressive because not only of the size of the candle, but even the long-term moving averages have been broken out of. So Hero Motors looking good. Makes me want to look at Bajaj Auto again and think about whether Bajaj Auto will play up a catch-up game. But you know what? I mean, this is the psychology. You like to sometimes look at the underdog and say, okay, whether this guy will catch up or not. But if you are going to follow, the rules of the market, you should always be in strength. And well, at least as far as the two-wheeler space is concerned, Hero Motors is where the strength clearly is. Okay. Except, however, if you look at it from a slightly longer term perspective, in which case this is what, still about 800, 900 rupees below uh, its life high, almost 30% down. But Bajaj Auto is not that low. It's about 520% down, right? So from a relative performance, from a longer term thing, so this is short term very good news on Hero Motors, but on longer term maybe Bajaj is something that would outperform over the next say 3 to 6 months perhaps, right? Just thoughts, something for you to think about. Let me reword that. Hero Motors might be a good for a trader, but Bajaj Auto might be better for an investor. Okay, so hopefully that makes sense. Okay, that's of course as we see the charts today and based on what we see. Tomorrow the story could be quite different. Then looking at Maruti. Okay, so Maruti, oh, there was some good news, bad news, depending on how you want to look at it. Um, the X cross, X cross, yeah, X cross, whatever. That thing they launched before the Baleno, is the price of that has been cut by 2 lakhs. That's a huge cut. Really feeling the pain of anybody who bought it before the price correction. 2 lakhs down, and they're moving the Ciaz to the Nexa showroom space. Okay, and some more models to be launched, I think, this year. So anyhow, good candle here also. 200-day moving average at 4,175 is where the first resistance will be. Then after that, easily a 200 move, almost a 5% up move can be expected. Not sure whether this is an area of any historical support. Let's look at that. Oh well, look at that. There was a top there, another top there, and that's where the market sort of just lowered itself yesterday, and that's where the low was established, and today we're up. Okay, great. So Maruti potentially a buy, but that's in the short term for a trader. Looking at M&M, all right, so clearly a much better candle, actually much better, confirmatory, reversal, etc. Everything very unlikely that M&M is going back to 1100. Very likely that once 1200 is gone, 1250 is very quickly coming. Fall back to say 1160 or thereabouts is potentially a good place to buy. Okay. Next is Tata Motors, and well, clearly this one does not have strength. Okay, so you basically want to stay out of Tata Motors if you're looking at the heavy vehicle for the space, right? Just zooming out a lot. Just wondering if we have any support here. Right, in the past we did, it just does not seem. Okay, so we've got 2012, 2013, and this is where we are. Okay, in terms of strength, well, relative strength, etc., and all that stuff, clearly this is an underdog thing right now. Possibly JLR in China is what is causing a decent amount of pain here. Oh, but finally they did get a new CEO. Right? That was a post vacant for almost, I think, 1.5 years, at least a year. Guy was previously in Airbus and some of the other big European conglomerates, I think BMW also, or something. So let's see if he comes up with something different and innovative. Okay, so Tata Motors not the thing to buy. M&M, yes. Bajaj, yes. Hero Motors, yes. Okay, and that's it. Okay, so that's the auto space on the. Okay, looking at metals. Not too many in the Nifty, isn't it? Seem to have been shunted out with their poor performance in the last 1 or 2 years. Let's see if they bring them back. Okay, so in order to do that, let's look at sale. It's no longer a Nifty stock, but still, since metals are looking strong. Okay, so that's there. Tweezers bottom over the last 2 days, and then a big nice bounce today. Okay, but long way to go. It was a stock which was at wow, 280 rupee stock has become a 40 rupee stock, and this is a very important multi-year support. 2004 could be fantastic values, actually. That's the question that you have to look for. So it would be great if we had some FA report of sale, right? It to know about its valuations enough. We're looking at a bargain buy. I'm not sure about that. Tata Steel. All right, so this has clearly shown higher tops, higher bottoms. Perhaps one of the very few stocks which is probably in the large cap space, which is probably in a in an uptrend. Everything is so far at least that we've seen is in a downtrend. See how that 200 was a support in 2014, and then in 2016, and possibly the worst might be over. They are downsizing in Europe. Okay, they've cut some jobs in UK. In case you're following the news. So, well, you don't lose money. That's good, and the markets do reward you for that. So, short-term downtrend broken, long-term downtrend tentatively broken out of, but the market came back. We seems to have just put another bottom now, and quite possibly it's going up, right? So Tata Steel, I would say good TA on it, right? Okay. Yeah. All right. So Tata Steel definitely looking good. And then do we have okay, VEDL. All right, Vedanta, really not metals as such in terms of more my iron ore, and going for a toss, and at best a doji, very good volumes, but before that we were with very high volumes on the downside. So just that one day of good volumes today is not enough to turn the sentiment around. So just wait and watch, but don't go long. Around 80 is where you could probably get some good resistance, and just might come down from there. Having said that, well, are we at a almost at the 2008 lows for that stock? That's really interesting. Okay. Yep. Right. So almost at the 2008 lows, and we'll really have to see, does it really get bought there at these prices? Maybe just for technical reasons, and then we, have good reason why the market should go up. And of course, if they're supported by fundamentals, then that would be much better. Okay, and then there's nothing else in the Nifty. Let's look at JSW. Okay, and that's, well, clearly jumped up today. Volumes are a little lackluster, I would say, so you just have to sort of wait on that, but otherwise pretty okay. JSW, uh, that's where the resistance level is 1080. Watch for that, and if it goes beyond 1080, then we could see clearly much higher levels, 1100 most probably coming on this stock. And then once it's able to clear that, then well, who knows, could be, well, just jumps of 10s and 20s and 50s. It could be at 1200, it could be at 1250, and perhaps on the way to make a new life high. Clearly, from what we saw, whether it's SAIL or Tata Steel, JSW Steel, not very far from its life high. It fell about 50%, right, or a little bit less than that. But you saw the others that fell much more than JSW Steel does. So JSW Steel definitely the outperformer here. All right, so that's it, and just Hindalco. Okay, so the lessons of looking outside the index hitting home again, even though we're supposedly doing index stocks today, and this is a very wide double bottom in place potentially. If we take the lows, then I'm just putting a straight line here. Okay, right. This is potentially a double bottom, a tweezers bottom, and we could be sharply going up from here. I would definitely want to watch that and see what could happen, right? Uh, yep, yep. Hmm. Right, but still, JSW Steel technically is the strongest and fell the least. Therefore, when the recovery comes, could also be the stock that goes up much more than the others, relatively speaking. Okay. Okay. So that is the metal space, and then let's get into, let's say, VHEL. It's interesting. Okay, I was definitely not expecting to see quite a healthy chart like this on BHEL at least. Somehow I just have a bias against it, I suppose. No, I haven't lost money on it, so I don't know why. Okay, anyhow. So in this, we've got higher bottom, and we've also got it coming to the psychological mark of 150. And if 150 breaks out, then 160, which is also where the downtrend is, coming down, is what you have to watch out for. So from 150 to 160 is a potential up move, and a lot of consolidation here at around 145, 150. Today it didn't move up, or even though the rest of the market did, and that is maybe just waiting and pausing to digest this up move of almost 15%, and could just move up. Once it breaks 150, then maybe a swift move to 160 is also quite possible. So this is sort of in the capital goods space. Then what else do we have here? Okay, we look at L&T then. Okay, so L&T also, I would definitely say, showing some amount of strength here. Okay, it has come down from 1900 to 1100, almost what, no, not 50%, but 40% fall. That's quite big. But look at the volumes, right? So what's interesting about the volumes is that there is possibly some accumulation going on at these levels in L&T, right? I'm just going to make a note on that. I'm going to say query accumulation, all right? And let's see what it does. So, right, where did all these colors come from? Yikes. Okay. Okay, so on the weekly chart, definitely too early. This could just be a small bounce before, before there's any substantial or meaningful up move. So be careful, but on the daily charts, definitely showing some strength that is coming. Right? Oh, we forgot to look at NMDC. Okay, so NMDC daily chart, Harami candle has clearly made a new life low, right? Okay, so we were hoping that that would not break, but well, it has, and we now have to move this red line way down there. Okay, so the worst is not over. This could definitely just be a bounce. The commodity space, especially the raw materials commodity space, really no hope across the world at this point, right? With a tremendous amount of slowdown in growth that's happening in China and will perhaps cascade into other economies. Okay, so that's it about yeah, so I mentioned that already. Okay, let's look at telecom. So this is Bharti. Well, I really don't know if any of these telecom chaps are going to, it's even worth spending our time looking on these guys for a simple reason that Reliance Jio, you think about it, first month of this year is almost over. You're supposed to do a public launch in about another 2 months. That's nothing in terms of a business lifetime. And if once Reliance Jio launches, and who knows, it could be completely disruptive pricing, etc. So, just for that fundamental reason, I would probably just stay away from the telecom space. Having said that, this stock has gone into a massive multi-year sideways consolidation. Very, I don't know whether I was going to say rare, and I'm not sure I'm right on that. I can't say I've seen enough charts to say it's that rare, but clearly, I mean, it's definitely something to keep in mind that this has really not made any wealth in what 9 to 6, 7 years, and more looks like a rectangle right now, doesn't it? Except that, of course, the volumes are pretty uncharacteristic of that, but that's fine. And one of these days, or rather one of these months, or maybe this year, next year, something, is going to do some sort of a breakdown drama, and that's when Bharti should really be gotten into. If anybody loves to do options, then I guess one should just look at selling the put at around 265, 270, and selling the call at around 440, and just keep doing that on Bharti as long as it does this sideways thing. So multi-year sideways thing, wouldn't want to do any further analysis on that. Then we look at idea. Okay, so here's, well, idea just tanked, right? And I don't know if results came out today or something, quite possibly, and it has just collapsed and likely to go down. It's gone down on higher volumes, and textbook, I would say, flag. Okay, that broke down. And if you look at the measuring implications from say about 130 to 110, we're talking about 20 rupees. From 115, 20 rupees down will take it to 95. So potentially more down move left. Clearly on a very bullish day, this is very bearish. So, uh, telecom should just stay out of it. Just for the sake of completion, just want to look at RCOM. And well, they signed another deal with Reliance Industries recently for some faster, quicker 4G rollout. And well, this is probably the worst of the pack in terms of performance. If you look at it, some 600 rupee stock is now a 75 rupee stock. But having said that, if we look at it from a sort of multi-year weekly perspective, then the question is, are we seeing sort of, I don't know, a bottom there? Even if we take this lower low, I mean this shadow here, then there's something that is potentially uh, a support that's going on. In the weekly chart, however, three big black crows, or red crows if you want to call them, that's not a very healthy sign. But 60 rupees may be a good place to think about buying RCOM, right? And why I'm saying this is because I don't know, it's just one, I would say, um, conspiracy theory today for me, but is there possibly a merger between Reliance Jio and RCOM in the months or years ahead? Because clearly RCOM has not really been able to beat Airtel or Idea, and I think the third largest. They had some, who bought Aircel? Somebody bought Aircel, and there's some consolidation that happened. So something. So I think there's consolidation that definitely needs to happen in the telecom industry. And since RCOM has really not done anything, outstandingly good or even averagely, I guess, could be a potential takeover candidate or a merger candidate with Big Brother again. Uh, so Mukesh buying over Anil. Wait and watch. Who knows? Right? Could be totally wrong though. Yeah. And then so some support at 65 here, but like I said, 60 could be a place to consider thinking of buying it. Of course, would be nice to do some more diligence or studies and see if there's any fundamental or any other reasons for which we could expect 60 to hold. Right. Okay. So that's it on the telecom space. Let's look at let's say oil and gas. We're looking at BPCL. Okay, so now if crude oil is now jumping up again, well then you better go fill up your tanks in the next 1 or 2 weeks because well, petrol and diesel should go up. Now what I really want to know, like I said in the previous session, is whether the government of India is going to decrease the excise duty or reverse some of them. They have been constantly increasing excise duty as crude oil has been going down and making a ton of money out of it. Good for the government, not good for us. And will they now reverse that and say, okay, fine, we had a bonanza, the party's over, and let's just start reducing it? Because also with the not so great fundamental economy in India, we really don't need the burden of higher fuel prices at this point. Right. So BPCL, I would more or less just stay away from it. Sideways, iffy, crude oil goes up, then this could possibly start going down. Wondering whether it's a sort of accumulation, rounding top type of formation which is there. And if crude oil does start to head back up, then this is clearly heading down, right? Though still there's a lot of what one would say intrinsic value or hidden value in many of these companies, which has perhaps not been fully realized by the market. Okay, so same thing for Hindustan Petro, really nothing much to say, right? So we'll just leave it at that. And so, right, so we have to talk about where is ONGC? That. Okay, ONGC. So, well, these are all producing the oil or extracting the oil from the earth, and their prices should fall as the crude oil. Kane declared some not so good results today. Well, I guess on should be expected with crude oil prices falling. Apparently, the net realization is something like $6.50 per barrel, and that's like I was really surprised. $6.50 per barrel. That's it. I mean, like, what's that $30 oil, $20 oil, and why are they getting only six? And where does the other 12 or $14, who's making that money? No clue, but anyhow. So that, and then 220 broke. I would probably just stay away with this. Crude oil is probably going to be fraught with a lot of events, news, announcements, rumors, speculation. And oh yes, the Iranian oil has still not come to the world markets. And when that comes, everybody is really wondering, what could happen. So a lot of event risk basically in oil and gas at this point, right? So if you're in it, then you should definitely keep that in mind. Okay. Okay. Kane. Where's Kane? Yeah. So there's Kane. Okay. So results came out, but market didn't go down, right? At least Kane didn't go down, and volumes are increasing. Whether that is accumulation, again, that's the moot point. But look at this: 400 back to 112. Live flow is at 88. Wonder whether we are going to get there anytime soon. Probably not, but still can't rule it out. Very strong downtrend, right? And wouldn't want to be touching it with a barge pole also. You really need to be either committing financial suicide or a complete moron or completely lucky or completely smart. One of them, I don't know, choose and pick to be buying this, right? Uh, it's just not done. 400, 120 could be going lower. Even forget looking at it. Okay, so we've done that. Now let's just come to the ones we have sort of been saving. Oh, let's do Coal India. Yeah, Coal India. Uh, I hope you're aware that it is expected that in the next by 2020, and it's not so far suddenly, right? 2020 is 5 years away, and with 1 month of this year gone, then that 5 years is also going to go fast, awfully fast. At least definitely much faster than I wanted to go. Let's see. And so anyhow, sorry for babbling. What I was saying is there's this report that coal actually could be much cheaper than it is right now, in spite of all the extra energy demands and all that stuff, because of various reasons. A lot clean tech, green tech, much more efficient grids, uh, power saving through LEDs, and even more technologies that are coming, renewables and all that stuff. So this might really go out of fashion very quickly. I hope you know that the last coal mine in UK was shut a few months back, right? It was covered in the news in the UK. I don't think it was covered in India. So there's no more coal mining done in UK. They are importing coal, however, but they have stopped mining coal. I guess I don't know whether it's an economic reason, because like one of the coal miners was just asking, how can importing things from across the other end of the planet just be cheaper than just digging it out of this hole here? And from a common sense point of view, it's a question I still don't have a common sense answer for. But is it environmental? Is it just financially better? I don't know. I have no idea. But yeah, coal is on its way out for many reasons, and therefore, Coal India could not be, perhaps in the from a flat perspective, is not something that you want to be really considering in your portfolio anymore. Just leave it. That was the weekly chart. Nothing great about it. Today, however, okay, lots of good volumes on the daily chart with a Harami candle, and that's really, well, I would say nothing positive to look about. 310, then a lot of resistances at 320, 330, and also maybe something good to short actually. Can goes to about 310 and it can't hold, then it could, it could go down. The only thing is today's volumes are exceptionally good. So in the face of that, whether it's really going to go down a lot, that is something which is still a moot point. I think in terms of risk reward and all, there are possibly many other or a lot more stocks which are much better, and we should just wait for that. Okay, so that is Coal India. Let's look at GAIL, right? All energy stuff, right? So GAIL has been on a massive up move in what, since September, right? I think a lot of events, news, something about the Qatar gas thing, prices were going to go down and all. So, and then there's something about distribution pricing. I'm not sure. Check it out. But 280 to 380 in just a matter of what, one, 2.5 weeks, comes down, consolidates. Fantastic volumes in mid-November last year, and then now after coming to 320 and taking, pivoting around the moving averages and the support lines for something, it is currently at 367 today and on good volume. So this is something that one should look at buying on dips, that's for sure, right? And if 400 breaks out, then definitely going to higher levels at 440, right? So that is definitely a good one. And this 280 level was a multi-year support from 2007, 2008 onwards. So it's almost an 8-9 year support. Um, Similar stuff, remember, happening on Tata Steel and other, technically speaking. Okay, it's a completely different metal. This is energy, but technically just track that. Okay, so on the buy list, definitely GAIL. All right, and then Grasim. Let's look at Grasim. Look at this. Grasim is not very far from its life high at all. It's more like a stock which seems to have been consolidating since June of 2014, so like 1.5, 2 years of consolidation going on there. Just going to remove that and let's put 2000, 3,400. Whether we've got the stock liking that number for some reason and just pivoting around there for some time. That's possible. Okay, so it's coming to definitely a support zone. We are looking at the daily charts on Grasim, and today it didn't go up, but unlikely to actually go down much given the big correction in the market. We've seen many down moves in many of the sectors. This one has stood out quite well. I would definitely want to do a detailed read up about Grasim, fundamental business wise and all, and just from a fundamental or a reason or a causality perspective, try and figure out what's keeping this up. And if the market does recover, this is definitely a stock to consider going long on. So Grasim, good support. Like I said, another 40 rupees down, which will just be another 3%, or the 2.5, 3%. You could actually get good support, and then it could really jump back up. So that'll be something to watch out. And I'm just looking at whether any odd stocks have been left behind before we finish off into banks and IT, which I think is the only thing left, right? Z, all right, so NTPC. Okay, NTPC somehow never just liked it. It's it's volatility, up and down, massive movements, and are good for investors, I guess, but forget it. I still don't like it. Don't like the picture at all. Don't do anything that you really don't like. Yeah, look at this. What sort of a pattern is this? I mean, it's just maybe I don't like it because it just confounds me, right? Just a personal bias. This is like one seems diverging a little bit downtrend channel, and then this massive breakout. The only thing is that there is a potential. Oh, support there, a double bottom, and once 160 goes, this could go higher, but you know what, you're going to find better stocks. Okay, power grid. So this is another one which has been, I think, doing well. And 2008. So if you're wondering why it looks so short, then because we are looking at it in monthly mode. Okay, looking at it in weekly, then today looks like today didn't do any good for this stock, right? Again, just stay away. Nah, it's like gone sideways more or less between 80 and 130 for 6-7 years. Why get into it? Forget it. Okay. Yep, just looking at the list. Let's look at then now Big Daddy Reliance. Okay. The reason you see so many charts on Reliance is because well, I just been tracking it a lot. Let's clean this up. Okay, so those are the major levels. So this is 940, and on top there is 1100. And when we zoom in, okay, what we see is a very nice tweezer stop on Reliance. So this is a daily chart, and then has come down very fast from 1080 to 993, and then today is just sitting above that support line, which is nice, right? But the big thing in Reliance actually is there on the weekly chart. It's easier to see there, which is this 1-2 year symmetrical rectangle. And just talking about just following your convictions. So some just sharing his regret of yesterday. So looking at this stock yesterday, very nicely intraday and all, and it had come to 984, 985. I knew this, and I'm wondering, should I, go long and all that, um, and said, okay, let's watch one more day. And well, what happens in one more day? You get some very good news, and the market opened actually 20, 25 rupees up, and then you're stuck on the other side and saying, "Cha, I missed the opportunity. Should I bought it yesterday? Should I buy it today?" Okay, so you just why am I saying this? Because I just want to reiterate this whole TA business and sort of a reaffirmation of you do some just decent trendline studies, look at it in multiple time frames, and you get these good levels, and then you just got to follow up with conviction and guts, right? There is risk, and there is nothing, there's no getting away from that. Otherwise, don't play this game. And I should have gotten in. Anyhow, who knows? Monday is a different day, and you can still get in if given that this support that this so in daily charts and weekly charts. Luckily, in AMI Broker, you can have different studies. Um, and so I've just left it at that. So basically, you've got a harami pattern in the candlestick pattern of Reliance right now. And if say 105, 1005, 110 holds on Monday, then you could definitely consider going long on that. And once it clears 1100, all right, 1085 will be definitely one critical place. But once it clears 1100, then very clearly 1150 is there, and the big move should happen once 1150 is cleared. Another, again reiterating, I did that last IMR also, that this is a 7-year sideways sort of move, okay, and massive consolidation. And if you look at it from forever, this was a huge move, let's say from 2003, from 100 rupees thereabouts, almost not really one way, but a one-way move from 100 rupees to its peak of around 1,600 rupees. So it's a 16x in about 4 years, right? And it's India's largest company, almost. And then you got this 2008 correction, which is it now looks insignificant and small, and it's just gone sideways. So a 16x move is, I think, now being digested. This is truly Kumbhakarna style uh, market behavior. It's now gone to sleep for 7 years, and I'm just wondering. Okay, this is open speculation right now, whether it is now going to wake up again, and then we're going to see maybe another big move, possibly on Reliance, right? Things to think about. And here's the thing: there's a lot of volume here, 2016. Okay, so track it, think about it. Definitely no shorting it. I think if you're shorting it, short it only for a short period of time. Okay, that's a stupid thing to do. Shorts are always short period of time because you have to square off a short. A long you can hold, right? So yeah, this is something to maybe accumulate at every opportunity and hold on for. If you're a patient multi-year investor, then this could pay some very handsome dividends, right? Okay, so that's Reliance. And let's look at what's left: FMCG, pharma, and banks. So we'll finish off ITC, right? So ITC now as perfect doji as you can get. Volumes are high. I just wait and watch. I'm not sure if the results are out. Actual results are out, right? I'm not sure. Okay, but anyhow, even on the sector index, the FMCG was not really showing any strength at all. So that's something to keep in mind. So we'll just move on. And on the other hand, if it comes to 300, I'm wondering whether that's going to provide some psychological support. 295, that's also a multi-year support, 295 and all. So it's possible that we could take some comfort from there, but This is a weekly view of ITC, and I don't know if there's a tool here to draw curves. I don't think there is. There is, right? So just wondering, right? So just think about that, right? Can I get that? How do I get that right? Okay. Okay. So I hope you can visualize that, and just wondering whether that's one distribution thing that is going on there. And so this is weekly, and clearly we've got I would say a neckline there somewhere, and we just at that neckline, right? And if that were to break, then what could the implications be? So we're looking at from 380 to 30, about 80 rupees, 75 rupees. So we're talking about 230 rupees. Whoa. All right. So are we getting to 230 is the question. Technically not a great support. 200 is definitely better, but potential measuring implication, and that could take many months to come down, right? So not in any hurry, or a few weeks definitely. I don't think it'll be in a few days. So that's interesting, right? ITC, I very carefully watch it. Wouldn't want to be in a hurry to be buying it at all. Okay, then Hindustan Unilever. Okay, so this is also on the weekly chart, and again not showing any real, I think like real, but no strength at all, right? So this is where HUL is. This week's candle also quite bearish, and look at it in daily. Wow, today has actually been pretty bad. So FMCG is potentially the place to short. Both HUL and ITC could be shorting candidates, and yeah, 771 breaks, then 750, 750, 740 is value to look at, and then if that breaks, then even 650, right? Yes. Okay. So that is HUL. Something dynamic broker. I still have to learn and keep putting these vertical lines in places I don't want. Okay, so FMCG clearly shorting, so I'm putting that on my list. Okay, HUL and ITC, and these are potentially multi-month, multi-week shorts at least, and any bounce up short term could possibly be used to look at finding even better shorting opportunities. Okay, so that there's nothing really else here. This okay. Next, let's look at pharma, and then we will close with banks. So starting with Cipla. Okay, so Cipla coming to about 565. Oops, that's not what I wanted. Yeah, and that's a pretty good support, right? The only problem is that we've got lower tops, lower bottoms, not lower bottoms, but lower tops, and that's just a weakening of sentiment. Having said that, there is also this thing about lower volumes that are happening in the where is that? Right, in the volume picture. Sorry, I'm thinking and talking also. All right, and whether this could be stopped. But here's the thing: if this level breaks, and that's going to be important, 570, it's a multi-year triple bottom. Okay, and by the looks of this, looks like at this point this could go either way. The only concern, or the not the concern, the worry. Okay, this is interesting. It's one of my pet themes, which is sort of yet to be validated. This level of 440, which was a multi-month resistance in 2014, 2015, has not been tested as support. So whether we could see 440, and that will really be a nice shorting opportunity, right? So Cipla, nice short to old life high, right? So only thing is volumes, but otherwise it's looking quite nice. Okay, on the weekly chart of Cipla, the volumes are actually favorable on the short side, right? So there we are. And look at the last two volumes today, this week, and you can clearly see that the volumes are sort of picking up, right? And again, we've got distribution, I would say that, and there you have it. Yep, right? And are we breaking down? By the looks of it, quite possibly we could be. So if the market is going to fall down, then definitely FMCG space, Cipla, and I'm guessing other pharma stocks are on the line. This is Dr. Reddy's, and it's already come down on good volumes last quarter. And today there's been a small lower shadow on the weekly charts. On the daily charts, we've got a nice Marubozu. Nothing great on the volumes, but okay, 2,800, decent support. Definitely not a chart like Cipla in terms of shorting, and I think one could just sit on the sidelines on this. Right, nice. It could go to 3,000. That will be a good place to probably short it. At this point, no man's land. If you go to 3,000 and you start looking at signs of weakness in it, and here's the other thing about Dr. Reddy's, and I'm sure about Cipla too. The long-term moving averages have moved down, so these are likely to keep going down, right? So that is, Cipla was done, Dr. Reddy's was done, and then what do we have here? Nothing else, right? Yeah. Lupin, sorry. Okay, so Lupin 1700 showing some support, but this is clearly consolidation. Volume is down, and okay, volume is down, taking some support at 1700. Even if it bounces to 1800, okay, but probably 1800 could be a place to get out of it. So you know what, all the major pharma stocks are showing that triple bottom type resist support, which is possibly going to break. You've got a clear double top here at 2100. Looks like the story in, at least for pharma, is bearish at this point, right? And if Lupin breaks, then 1500 is very likely the next level to uh, think about it, right? But Cipla is a better shot, and Dr. Reddy is after that. Okay, then Sun Pharma. Okay, so this is broken down. Actually, this is the only one which has some sort of an uptrend here. Okay, even though it is really just a short-term one. So, in a sense, showing uh, relative strength, that's for sure. But this is just a bounce. Symmetrical triangle, very nicely broke down. You had a gap here. Gap got filled by this up move. Then watch what happened. You had another gap down here, I think. Or this might be a missing data thing. I'll have to check. Sorry. Okay. All right. And then now it's going sideways. So we are looking at daily. You should not be buying this till it can cross these moving averages effectively, right? So Sun Pharma is in no man's land. Just stay away from it. Okay. Next, let's look at um, we finished. Z we didn't do, right? Okay. So Z double top clearly at 440. Upper trend line, uptrending line from September has clearly been broken, and today gone up, but volumes yet to be convinced. Buy it only above 410, and then go short below 375. Till then, I would say stay away from Z. But in the long term, I mean, in terms of many years perhaps, this is a stock whose life high is at 802, and even from current prices, the stock would have to double to reach that. But even if it takes, I don't know, 2-3 years to do that, that's like 30 to 35% annualized return, and that's good by many standards. Okay, so that from an investor's perspective, maybe, but from a trader's perspective, it's in, like I said, no man's land. So just leave it there. Okay, now we do IT. Okay, so Wipro, okay, coming to its own, not its own life high is very far. It's like Z. Okay, so this is if you take out the, I think for many of the IT stocks, if you discount the 2000 peak, right, then they are not very far from their life highs. And so this is where we are, and right. So good support at 530, dancing there on Wipro at 530. Um, moving averages, that's the challenge, but tweezers bottom at 530, 532. Could consider buying it, but we'll have many areas. There's a whole zone of resistance from 557 to 568, and today red candle actually, which is but on low volumes. Um, so if he 530, if it comes down to for some reason 535, and at that time the volumes are low, then one could think about buying it at lower levels. Nice multiple supports at 530 over two years. Yeah, right. But that also means that this is sorry, to delete that. Yeah, in a rectangle resistance zone there, and its real next future is going to only be decided once it breaks 600 or it breaks 520, right? So till then, maybe writing those options, like the 600 call and the 520 put, or the closest ones there would perhaps be a better idea, right? Okay, then going up, Tech Mahindra. Okay, so made a life high there, and then 460 with support, but it's going to, it's in a downtrend channel, as you can see, right? So that's one thing. Okay, it's in a downtrend channel, and if it, when it comes to 460, if it comes to, that's when one can think about doing something about it. If it just trends down, whether we want to short it at this point, but I You could, but rupee appreciates suddenly and all that, and of course make sure that the results are out of the way. 500 psychological mark, right? So that's where it's definitely going to get some support, and you need to watch out for that. So far so good. Watch this downtrend channel, watch the resistance support lines for it, and watch 500. And a breakdown below 490, 485 quite decisive. It will probably go down to 460 and then up. However, lots of resistances every 5-10 rupees all the way to 550, and we'll have to wait and see how that takes it out. Writing the higher calls is probably a good idea, okay, on Tech Mahindra. Okay, so Wipro, Tech Mahindra, TCS. So if you look at TCS, again, this has been going sideways for a long time, just like all the rest of its brothers and sisters. And okay, we've got that, and we've got that. So, and now we've got that. So 1, 2, 3, 4, 5, 6 months sideways move. Volume maybe, at best I switched to weekly. That's why all those lines disappeared. Erratic, can't really read much on the volume side, I would say. And could be, in a sense, a distribution phase, and then now we are possibly going down. So in probably in quite a few ways, the best times of IT are over. If you speak to people in IT, they tell you a lot about a lot of the technological changes that are happening, which are a threat to their own job. A lot of automation, a lot more than people somehow understand, and how all that might just take out a whole layer of people in the industry. So that plus all that automation doesn't require so many back-end people. So unless there's a fundamental restructuring a company does to really get some new innovative technology projects and all, the business model, I am no expert in IT to say is under threat, but definitely the business model, I would at the very least say, is not promising as it used to be. And maybe the charts are reflecting that reality, so we'll have to wait and watch. So daily chart of TCS, I would say any move up to 2350, 24, even 25, especially if it's on lower volumes, should be used for shorting. Very circumspect on it. And again, if you look at volumes on the last few days, it has gone up, and those volumes are clearly on the lower side. If it breaks 2250, be happy to short it with the stop loss at around 2310. And where could it go down to? Well, I guess 2000, 2100 at least, and then we'll review after that. And that's a move, well, in a sense, from 2700 to 2300, 400 rupees, about 15% took about a good 6 months. Right? If it just goes down at this rate, another 6 months to lose another 15-20%. Of course, in between you'll have this rapid down moves, but if you include the bounces and the corrections, then that's what I'm referring to also. Okay, so that's it as far as IT is concerned. And then finally we'll look at banks. So we'll start with just alphabetical order. Axis Bank. So that has come down from 650 to 367. And then what a massive move. Look at that. Fantastic volumes. Gaps today and day before. Oh, sorry. Thank you. I forgot Infi and HCL Tech. Where is? We'll come back to Access. Okay, so HCL Tech. It had to be an IT person who only reminded me. Thanks, Manjuvenia. Okay. So this one came down from 1050 to 800. Same, it's that sort of distribution type thing. Big fall in October. I'm guessing this is because of the results, and then it's gone sideways. So really no recovery after that. Don't know if this quarter results are out. Okay, and I would definitely say that this is, first of all, sideways movement and all, but there's a hint of deterioration of the trend. And why I'm saying that is because the tops are now forming at lower levels, all right, and the moves up are pretty tentative. And then they've got all these moving averages plus the resistance lines there, which are going to offer a lot of resistance on the up move, and it goes to 880 especially. I think that's a good place to short. It may not even go there. 860, good place to short. And once it breaks 800, that will really be a good place to short again. So safe one to go short on with a stop loss clearly above 885, but that's if you go short really at high levels. But I'm talking about shorting at even 860 or thereabouts, right? Target once 800, one just on psychological number, 750 seems to be a better support. So at the very least, I think 750 is very much on the cards. Okay, next is Infi. So Infi clearly at its life high or close to that, and came out with some results which the market really loved. So looks like Sika is liked by the markets and he's producing results, but not everyone may agree. And what is definitely interesting about Infi's chart is the question, are we looking at a flag here? Okay, are we looking at a flag there? This is the only IT stock that we have seen today that I would not short. Okay, are we potentially looking at a flag, and then suddenly it moved from 1050 to 1150, and it could move from 1150 to another 150. We're talking about 1300, which would make it a new life high, right? Which has to make it a new life high, and whether that's possible, don't know. At least market seems to have liked the results. Again, consolidating for the whole 2015 between 950 and 1150 and all. And once it does a breakout, then okay, right, higher levels. So it's a congestion consolidation zone that's going on there between what's this level, 1050 and 1200, $150. At least that, if it breaks out, and you've got a flag in between. So you've got patterns at different time frames, right? So over 6-7 months, you've got a nice big rectangle, and then over the about 1 week, you've got a nice flag. Both of them potentially suggesting further up moves to come, and this is definitely interesting. I'd at least watch, right? In fee. Okay. I'm just making only bullish stock in IT, or are we missing something, right? Is Infi reinventing itself? Is the other company sort of lagging behind? Because Infi is now doing better than TCS. So Infi, like you remember a few years back, went through this really bad phase. It was not doing well at all. It was no longer the darling of the market, and TCS was. And now TCS seems to have gone into distribution and with the other IT companies too, but Infi seems to be catching the investors' fancy. Uh, Not sure we can do this, but it would be interesting to see if money is being rotated out of other IT companies and if it is money is flowing in. When I say money, I'm talking about FIIs, institutional buying of Infi versus institutional selling of Wipro, HCL Tech, Tech Mahindra, etc. Right? Okay, done. Thanks, Manju, for that reminder. It was really worth it. No doubt about that. Okay, so now we've got banks. We're doing Axis Bank. Okay, and definitely it is a really, really good buy. Okay, so I never like saying that good buy. It's saying like buy Tata. It is good buy, B-U-Y. Right, Axis Bank probably going back to 440. Only thing is it's got these gaps which need to be closed. So watch for gap closure at some point. Okay, and when that gap closure happens, just jump into that stock. Uh, there is very good support at 408, very good support at 366, and you can see that support was there in 2014 and just reversed after that on really good volumes. So fully expecting the downtrend line to be broken, fully expecting also a correction on this. So it's gone one way from 365 to 425 without a break, without a correction, right? And I would definitely expect that correction to come at some point, right? So that correction should be used for buying. A lot of resistances all the way till 485 from the longer term moving averages, etc. Right? So that is something to just keep a watch on. Okay, next Bank of Baroda. Okay, so it's turned around at around 122 and down gap here has been closed with the candle of yesterday and now is Marubozu type candle today. 140 at the very least is a potential target, I would say. Okay, and 140 possibly going to 140. Only thing is again it's in the middle of no man's land. Support is at about 15 rupees down versus target is 15 rupees up. 1 is to 1 risk reward ratio, but still this momentum, who knows, could just hold. Okay, then the next bank, HDFC Bank. Whoa, what happened on this day? 20th. Look at this massive upper shadow. If any of you is using some other data source, could you please confirm that this is right? Okay, or even from the Bhav copy. That is a massive move. And if you were in futures or options, you would have just been seeing stars. Could have been a freak trade, but 1020 and 1110. Did somebody have a fat finger and press the wrong number on the keyboard or what? Right? But this is massive and all set to go up till about 1060. I would be a little hesitant. So 2015 again a year of consolidation for HDFC Bank. 1000 perhaps a good place to buy, and once it clears the life high of around not around, what is it, 1120, then definitely the next up move is most likely starting, right? Okay, then we've got HDFC. Okay, again stock close to its life high. Okay. Now one thing that will be interesting, especially for HDFC and other housing finance companies, is that just putting it both ways, if the economy gets weaker, whether there'll be housing loan defaults that could start affecting these guys, and they start to have NPAs. Uh, so not so much the bank part, but definitely uh, the housing finance companies is just something that one should probably keep in mind at the back. Okay, keep it there. Not a except we've got that to think about. Yeah. Okay, downtrend, and if 1,100 on HDFC breaks, then definitely short it. But also, if it's going to go up to about 1,200, then be careful, review at that time and see whether you still want to be going long or it's going to form a lower top. So it's done a lower bottom by breaking the support, but there is a lower top in the making. ICICI Bank, so bounced from 220, somehow not looking very convincing, the candles, right? I think there was some report that ICICI Bank could be sitting on much higher NPAs than I think is, it was just a rumor. And as usual, ICICI Bank rumors somehow just tend to fly thick and fast. 220, good support, multi-year support actually. It is high at 2008 and could be a buying opportunity, but again, one caveat on anything of this, should have said it before, again, last week also forgot. Um, Make sure the results are out of the way, right, of the companies that we are discussing, and the results could really, make the market go in some other place for some time at least. Okay, so 220 good support, but whether you're looking at it from a weekly or daily perspective, not too much strength in it, so it's, I think, better just wait and watch. Okay, so that is ICICI Bank. IndusInd Bank. Huh? IndusInd Bank also has this. HDFC Bank also has this. ICICI Bank doesn't have it, and HDFC has it. Oh, share count shows the same. What is this? This is some basket selling or buying by bank stocks and all. Thanks for that confirmation, Manju. I mean, then it's like happen at the exchange, or unless the exchange is given out some buggy data, or these trades happen. I'm wondering what the rationale or the explanation is. Interesting. Okay. IndusInd Bank. All right. So first of all, pivoting around the 200-day moving average, up, down, and it's like tried to go up today. But 905 is resistance, and then 925 is also resistance. Okay, and for this results, it came down, and then mad move because of results. I don't know. Okay, showing some, it's pretty erratic, volume. So not sure what to make of it. This would be the level to watch out for, 960. On the other hand, if it does break these lows at what's this price, about 965, then it could just come down very quickly to 865. It would come down to 825. Watch this on Monday and Wednesday. Tuesday is a holiday, very carefully, Republic Day. And watch this zone. It got sold off at that level today, and if that resistance reaffirms, then watch. Right now, sort of in the no man's zone, could be a short. Kotak Bank. So fantastic move up for Kotak Bank for several years, and then 2015 year of consolidation looks like it's come down again, recovered today. Fine, good recovery, but only so much, 750 it is at, and is that the life high? Yes, that is the life high. How come I've not marked it in my traditional green? Hmm. So Kotak Bank definitely again this long upper shadow in Kotak Bank. This is interesting. Hmm. Maybe we should put it out on some forums or just Google around and see if there is something which is there. Okay, move up. Looks like a confirmation of inverted hammer at this point, but technically it have to go above 700 also. Hmm. Nothing on the charts. Sorry, in the indicator, which is additional evidence. So wondering whether there is. Yeah, just wait and watch. I'm a little curious to know what these big ones are. Okay, State Bank of India next, and I think that's the last chart for today. Ah, yes, bank is there. All right. State Bank of India just a collapse, right? From 220 it just went to 170, big volumes, right? Now here's the thing about those big volumes. Now they're obviously selling, but who was buying, right? That's the thing to also think about, right? And see if there were any bulk deals that you can find some data of on SBI. So 2008 to now, another 8-9 year support which has been tested at this point. Way too early to say whether it's going to hold or not. Okay. If you look at the weekly candle, we have a nice actually doji, a weekly doji. So could be is very tentatively saying that the end of the fall, right? Could be, but I think it's just way too early days to be confident about that. And if we go to daily, you can see that there's a lot more work that needs to be done for the stock to be confidently be bought, right? Now you could put a stop loss below these prices of around 172 or even say 169.50 or something like that, and then take your shot. But technically, it's very early days and definitely a high risk long. Um, the big worry is NPAs, and the NPAs could definitely and quite fast become weaker. And just and also quarterly results are out or not, don't know. Um, okay, so SBI 340 rupee stock has literally become half almost at 180. Long way up. I would watch that 180 level very carefully, right? Or you could. mm, Hmm. Thinking about a vertical bullish spread. Mm, Buy the 180 call, sell the 210 call, and you could do that for the Feb contract. Okay, could probably do that for quite a number of stocks in tentative up moves, right? So you've got a low risk long position or yeah, low loss long position and see how that works out, right? Could to give you some pretty handsome profits. Uh, Wondering whether you could do that next week. Then if you do that, do it on Monday because there's time value for Tuesday. You'll all quickly get actually it'll be discounted, but Wednesday some little money you might make. But consider that for the Tuesday. Sorry, what am I saying? The February contracts, right? Vertical bullish spreads for banks. Okay, I think safer than going long on the spot and or futures for sure. especially given these big down moves and those very suspicious big upper shadows. Then Yes Bank, okay, definitely looking more respectable than any of the PSU banks. Of course, this is a private sector bank. And well, similar story, wouldn't you say? I mean, a year of consolidation does that, but then comes out with probably results here somewhere that the market doesn't like, and then we just see this down move. And right now, clearly, we've got a downtrend there. 640 is where it is at, and yeah, 525 I guess is but this is just getting weaker in my view, so we move to weekly now. And again, like what we saw in some of the other charts, can't rule out a sort of distribution type pattern here. Okay, two rounding tops. Think about, I'm just wondering, a very long and crazy head and shoulder top. I'm going to make this, I'm going to really stick my neck out on this one, and for all I know, I'm just completely wrong on this. How do I take this up? Okay, a very awkward and twisted left shoulder, all right, and really not, all right, delete. Um, Not definitely not the way one thinks about them. Okay, and why is it coming like this? Okay, fine, leave it. That's the crazy head, and that's the right shoulder, and this is a weekly chart. And if that neckline were to break, right? So even though you've got a green candle this week, then I'm wondering, you know, where are we headed to then? There is some really good support here at around 345. Whoa, where is 345 and where is the stock now at 684? Well, I'm certainly hoping that's not happening, because if that does, and you're talking about some of these biggest banks go down, okay, or at least not biggest banks, but the sentiment hit will be very, very powerful. Then just wondering if there is a a panic sort of thing that grows up in the market, and then we see one poof down move. So not ending on a very happy note actually. The public sector banks are showing definitely a lot of downtrend strength. The private sector banks have been showing sideways moves for a good 1 year plus, and then in the last 6 months, 1 year, the result seems to have just knocked them down to like one step down, and things like these are now showing rounding distribution top patterns. I'm wondering what's cooking underneath in terms of uh, fundamentals, and if something is going to show up either in this quarterly results, and if not this, then the next quarterly results, and then of course the entire global situation which is there. Okay, so just want to look at ICICI Bank again, not good. Want to look at State Bank of India, okay, really not good. And then Axis, okay, but still clearly in a downtrend till that downtrend really gets, what do you say, uh, reversed with a proper uptrend. Things are not happy, that's for sure. Okay, all right. So banks. So this is like, really interesting. So you've got banks not doing well at all. You've got FMCG not doing well at all. You've got healthcare not doing well, or pharma at least, not doing well at all. And all of these three are like major components showing quite considerable amount or decent amount of downside strength. And on the other hand, you've got metals uh, and autos show quite a bit of strength. And then we've got cement also doing well. And the only IT stock which was doing well was Infi, and everything else was also doing badly. So this is like a very sort of in quotes balanced market. Some sectors showing strength but have already gone down a lot. Others are showing weakness at the top. So what are we looking at? Are we looking at a scenario where we are forming a bottom in some sectors and is a fall yet to come in the other sectors? Because quite honestly, if you're talking about IT and banks and pharma coming down, I think just on simple issue of weightages in the Nifty, they have definitely a lot more weightage than say metals or um, what was the other thing? Autos even put together. So the balance is more on the negative side as far as sectors are concerned, and um, the overall trend is concerned. So some interesting, long opportunities, but those will also just very, very quickly. Oh, I forgot the FMCG, right? Uh, um, except in fee and banks, right? Many showing distribution and multi strong downtrends. Some at important multi-year supports, right? So, this is, I think, going to be a very interesting week and months ahead. We're just going to really have to see how this goes. Um, and that's it. I think it's come down to something very stock specific now. You can't just be sitting on a white portfolio and think that it's going to work, and you're going to have to shuffle around your money in terms of what you should clearly not be in long. At least even if you don't short, you should not be in all these IT, Bosch, FMCG, pharma and all, and banks, okay, except maybe Axis Bank. And on the long side, well, there's this other thing. So technically fine, the market is clearly divided. I'm just trying to, I don't have an answer. The thing that's going round and round in my head is how is it fundamentally, inside the companies, business wise and all, are we seeing this split in the economy in a sense? Somehow that it can happen, some sectors lead, others lag and all, but metals, autos leading, and say for example capital goods on the other hand dragging, that somehow just doesn't add up. I hope you're getting the vibe, actually the feeling. Not a very comforting overall fits together sort of scenario right now. And in a situation like that where there's uncertainty and in quotes uh, something suspect, yeah, that's the word I was looking for, then till that suspicion or anxiety goes out, there'll be this overhang of things going down. It's just maybe news information, some event happening that provides the clarity for the market to sort of know what to do. And like I said in the beginning, this Mario Draghi thing, ECB thing, well, that's fine. It's band-aid. It's not repairing the problem at all, right? Okay, so with that, we've come to the end of today's session. Uh, this last part actually took much longer than I anticipated. Got me a little flummoxed. I hope you got value out of it. Would love to have your feedback. We'll try and put up not try, the recording will definitely be up by tomorrow afternoon. Try and get it up earlier and the links will be sent across to you, right? So that's it. Have a good weekend. A long weekend for some of you probably. Monday if you're taking off, 4 days. And after expiry, we'll see how it goes. Oh, just while we are leaving, I'm just tempted to look at what is the US market doing and the rest of the world. And well, FTSE is still holding up quite nicely and 2% up. As far as and CAC is 3% up. That's slightly lower. It was 3.4% up. DAX is 2% up. Another thing is wonder how the volumes are. And well, US is also more or less quite happy at this point. Um, so Monday, interesting. We see a gap up open because the markets, global markets did this, or is there something cooking underneath in the um, market somewhere lurking to just grab us? Well, phases like this in the market do happen, and we just have to write them out. Maybe the best thing to do is to really do nothing till that sort of confidence or clarity returns, and then we jump back in, right? All right, so with that, coming to the end, thank you very much for your participation. Have a great weekend and do contact us on these contact pages, phone numbers, emails, and do please give us your feedback. All right, thank you and have a great weekend. Good night.